Hello, everybody, and welcome to today's webinar that will focus on ESG and sustainability trends for 2024. I am your moderator, Josh Green, and want to thank Private Equity Wire and Novata for hosting today. I'll briefly introduce myself. I'm the COO of Novata. Novata is a technology platform that helps private market investors tackle sustainability, and have three amazing guests today to talk through trends for 2024. And the structure for the conversation today, we'll do some brief intros, and then before we look forward, we're going to take a quick look back at 2023, and then we'll turn our attention to the year ahead. So let me hand it over to Ali, and if you could introduce yourself, tell us a little bit about yourself, your firm, and perhaps a bit about what motivates you and the work that you do in ESG and sustainability.
Yeah, absolutely. Thanks, Josh. So hi, everyone. I'm Ali Fry. I'm the OPS manager of ESG here at Clearlake Capital. We have just over 70 billion AUM, and we invest across industrials, consumer, and tech, which is kind of an interesting cross-section to be doing ESG for. Prior to Clearlake Capital, I actually kind of held a few different roles in finance and strategy. I was an ESG consultant for some time. I worked at an investment management firm specializing in developing markets while they, at the time, were raising their first impact fund. Have held roles in IR for a big public tech company, and then started my career in VC. So kind of jumped around a bit. But in moving through these different paths, what really excited me and what motivated me to become an ESG practitioner was really the potential for some positive impact. So both initially kind of in these firms that we're working with these portfolio companies, our own firm included, and down to the experience of kind of a single employee there, and then more broadly within the surrounding community. And I truly believe that all of these different things that we look at for ESG can really make a difference in the world. And I am kind of, from the firm perspective, lucky enough to work at a firm that does not treat ESG just as a checkbox, but really also believes in that kind of it is a tool for value creation, and there is kind of real continuous improvement to be made.
Thanks, Ali. Sonia, over to you.
Thanks so much. Hi, everyone. My name is Sonia Lagorg, and I work on purpose and ESG at Georgian. I'm super excited to be here with you and share my experiences and opinions about what's happening in the world of ESG. So a little bit about Georgian. We are a growth stage B2B software investor. We're headquartered in Toronto, Canada, so might be giving you a little bit of a different perspective from this part of the world. And we predominantly focus on emerging technologies. So for example, applied artificial intelligence. Our firm is really motivated by the tenets of responsible investment. In fact, we recently became UNPRI signatories, and I understand that that's fairly unique for our asset class, and it was a really exciting project to spearhead this year. As for me, I've been working at the intersection of tech innovation and social impact for just over 10 years. I've had the opportunity to work in both public sector and private companies, ranging from boutique consultancies to venture capital to economic development groups. And I think one of the things I've learned about myself during that time is that it's very essential for me to work in a mission-focused environment and on, purpose-related topics. And if I don't do that, then I suffer and my work suffers. So I'm very happy to have found this sustainability focus in private markets and to be doing that at Georgian with our team.
Wonderful. Thank you, Sonia. Paul?
Great. Well, hello, everyone. My name is Paul Yett. I'm with Hamilton Lane. Hamilton Lane sits at sort of the intersection in many ways between LP capital and GPs, where we invest our capital, our clients' capital, into everything in the private market. So early stage venture capital through mega buyouts, real estate, infrastructure. I think in total we have something over 1,500 clients across 50 different countries. And that's a bit about Hamilton Lane. I will tell you that just as it relates to ESG, we've come about it really from the onset. We've been in business for 32 years. Our firm was founded originally as a minority and women-owned organization. So the S part of ESG has been core to our DNA. And it's something that personally has been a passion of mine since I started here. And by the way, I started here 25 years ago. I just hit that 25-year mark at Hamilton Lane. And I've worn several different hats. I probably have had 3 or 4 different jobs, if you will, within the organization. The most recent started in 2020 as the director of ESG. I came about that through some impact investing work that I started in the mid 2000s. It was focused in California. I sit in San Francisco. That's actually what brought me out to California, was to help manage this program that focused on underrepresented and underserved communities in the state of California. That was very interesting work in 2006. And then more recently, just, from a personal perspective, living in Northern California, like a lot of parts of the globe today, we're subjected to all sorts of inclement weather issues, including fire. And I've had neighbors impacted by it, evacuations, and things that, really spoke to the personal nature of what we're trying to do overall as it relates to climate. And I think that, to me, helps motivate me. It is a concern. It's something that we all should be aware and attuned to as we're feeling it more and more and more in our daily lives.
Thank you, Paul. And hopefully everybody is excited as I am now about this conversation. This is a great group to be talking about ESG and sustainability. And therein lies our first question. Looking back on 2023, there's been a lot of noise around the acronym ESG, and even in the name of this webinar, we've kind of hedged between ESG and sustainability. Curious how you think about that debate and how your firms have navigated it. And maybe, Paul, given the key role that Hamilton Lane plays in the private markets, maybe you could get us started with some thoughts.
Yeah, happy to kick that off. Clearly it's a challenge, at least politically, and that comes to play in different ways. So as I mentioned earlier, we operate in 50 different countries, a very global base. Certain parts of the world, no matter what I'm doing, it's not enough as it relates to ESG as a firm. And other parts, mostly North America, mostly the United States, kind of come at it with the bifurcation between the red and the blue states and all of the political noise around it. It's frustrating. We monitor it. I keep an eye. I think there's been like 37 states that have enacted some sort of anti-ESG, or proposed it, I should say, legislation, with half of those or so passing something. And so as an organization, we just have to figure out what about it is important to us. And I think my fellow panelists will say the same thing around, it's a risk framework. At the end of the day, it's a systematic way of looking at risk. And that's where I try to drive the ESG conversation, not around the politics, looking at investments, directly owning private companies. What are the environmental risks that are associated with the company, the geography, the industry that it's in? What are the social risks? If the social winds change, can I sell this company or am I stuck with it? And we've seen that over years where things like that happen. So it really is looking at it from a risk framework. And so whenever people try to dive into the political aspect of it, oh, ESG is bad, or isn't it a bunch of social, whatever that conversation is, I pull it back and just say, look, at the end of the day, it's a risk framework, and we use it systematically to evaluate these 3 big areas, which are crucial. I didn't mention the G, but governance maybe goes without saying is one of the most important parts of the ESG component.
Thanks, Paul. Sonia, how are you thinking about it?
100% agree with Paul. I think I would say the noise or the debate, it goes beyond just the terminology, right? I think if you're using the terminology, you get a bit of a target on your back. But It's really diving more into the effectiveness of using ESG strategies in investment and in risk mitigation, as Paul mentioned. You also said, frustrating. The word I like to use sometimes to describe my experiences, it can feel discouraging when your work gets politicized in this kind of way, one way or the other. And so what I do is I try my best not to let it distract me from actually doing the work and using these types of frameworks as they were originally intended, to provide us with these kinds of risk mitigation tools and lenses for decision making and for analysis. So, ESG factors, which can touch on a variety of things like geopolitical conflicts, we're seeing that in the world today, climate transition risks, very current as well. Cybersecurity is a huge one, so essential to enterprise risk, and so on. If these things can affect the companies that you're invested in, and the markets that they operate in, as an investor, you should be aware of that. And I don't think that's a bad thing, personally. So leveraging ESG factors can be a really helpful and structured way to acquire this kind of information and start to factor it into your work and investment analysis. So I try to stay focused on that.
Ali?
Yeah, I agree wholeheartedly with Sonia and Paul. So I don't want to repeat anything they've said, but I do think, to Sonia's point on the terminology as well, unfortunately, ESG as a term is a very kind of hot button politicized phrase. And I don't want to discount that or kind of simplify the issue too much, but I do think a lot of this really does come down to language. Like, we as GPs have always considered factors like governance or management teams, cybersecurity breaches, employee churn, safety records. So these things are not, when you kind of strip it out, these things aren't necessarily inherently political. So they are real material considerations that make good, long-lasting, profitable companies. And that's really what we're all looking for. And so I would say, if you take that kind of ESG umbrella term away, and that is certainly frustrating, as practitioners in the industry, we want to be able to use it because it does encompass so much. But I think if you take that away, again, kind of the underlying considerations of ESG are not as controversial. And I think that's really how you have to approach it and how you have to frame it, in having conversations with different investors who might be pushing back. And I think really looking at it through a lens of materiality, of kind of what is going to increase and decrease the value of a company and unlock that growth. So, I mean, I think it'll lead to a lot more productive conversations to frame it that way. And yes, I think that just general pushback on ESG is very frustrating. And it is kind of a shame that ESG is so politicized in that way. But I think if you look at those underlying considerations, to mimic kind of Paul and Sonia's point, kind of have to stay focused on that.
Josh, I just want to interject for a quick
please.
second on that. This is just a funny anecdote, and stay tuned for it, but you're going to see people changing their titles. Some of our peers out in the market are dropping ESG from their title, calling themselves, oh, I'm director of sustainability. And you also hear about different decks depending on where you're presenting. So some decks will be loaded with the term, others will say the same thing, but take those 3 letters out. So it's kind of a lot of noise.
Do you think there's risk there in terms of, I've heard the same thing in terms of multiple decks for European audiences and American audiences. Is there risk in terms of having that different messaging and having the paths cross?
Yeah, I'm happy to jump in on that. I think potentially from a regulatory perspective, right? Because at the end of the day, as we operate in a global environment, we have to think about regulation and what we're presenting and telling the market, the world, if you will. And I think you just have to be careful with that. If you're overtly saying 2 different things, no, we don't do anything related to ESG. Yes, that's all we do is ESG. That's problematic. So I think, nomenclature aside, if your message is consistent, this is how we approach systemically thinking about our due diligence, evaluating risk around companies, and that message is consistent, whether you have the ESG in there or not, becomes irrelevant. But consistency, I think, is key.
Yeah, I would absolutely agree, and especially consistency on representing what exactly you do as a firm and what those processes are. Again, whether or not you use the term ESG, I think is there is certainly inherent risk in presenting things different ways, but I think that's less of an issue than just representing specifically what you are doing well and correctly.
I concur.
All right, all right, so we agree that the work of risk management is not going away. The acronym, we'll see, and consistency in terms of the way in which you articulate what you're doing as a firm is really important. Let's look ahead to 2024 and let's make some predictions. What do you think are the key drivers? What are the key things that folks need to be thinking about if they're in this space heading into 2024?
Maybe I can jump in if everyone's cool with
Please.
it. So honestly, I think we're going to see continued demand for like a more sophisticated approach in GP's ESG related practices and more demand for evidence-based reporting. I mean, truth, the ESG DDQs are only getting longer is what it feels like. But humor aside, you know, we work with some of Canada's largest institutional investors, and they are consistently inquiring about our efforts in this area. And year over year, the inquiries are becoming more sophisticated and coming from more and more LPs. I think this has the potential to really drive the ecosystem in a material way. So by looking at the ESG commitments that the big fund allocators are making, we can start to anticipate how these commitments may inform their strategies and manager selection, which is something I pay attention to. For example, the Canadian pension plans like Ontario Teachers Pension Plan, the Canadian Pension Plan Investment Board, Caisse de dépôt et placement du Québec, they represent over $1 trillion in AUM, which is significant. And they've all made net zero commitments for 2050, for example. That may affect their investment mandates, and that's definitely going to affect our relationship with them. Another example is diversity, equity, and inclusion, which is a long-standing focus area. I think we all subscribe to that, especially when it comes to women on boards and in management teams. We're seeing large fund allocators are mandating certain standards. For example, Ontario Teachers, which I mentioned, they've recently updated its proxy voting guideline to require that large cap companies achieve a minimum of 40% representation of women on the company's boards. So it'll be really interesting to see if that starts to impact investors' mandates with respect to the private asset classes too.
Yeah, I would say I totally agree with all of that. And I would add that data is going to be the big push for 2024. And just to give you some numbers on that, for the prior 2 years, 2021 and 2022, I've surveyed several hundred general partners around the globe, over 450, asking them a number of questions. But one that I found interesting is how many of you report greenhouse gas carbon emissions at your portfolio company level today? And the answer in 21 was about 20% did, at least half their portfolio. So 80% didn't. And then 2022, fast forward, when all of this conversation is occurring, it just slightly increased to about 25%. I would have actually lost the bet because I thought it would be higher around some regulatory issues and just where people are heading. I think it will jump significantly this year and certainly next year. And so I think the data, and again, this is like capturing data. And I think, at least from what I hear from our client base, is they want the data, they want the numbers. What they do with it yet remains to be seen. Benchmarking, all sorts of questions that Novata is here to answer. But on that front, I do think that's going to be the big push in the coming year.
Ali, give us some predictions.
I was going to say, I would absolutely agree with Paul. And that was a little bit of my thought coming in here as well, is I think even building off just the quantity of data. And I think this is something that we have made huge strides on this year. And we as a firm, and I think we holistically as a market have started to wrap our hands a little bit about the quantity of data, but I also think you're going to see a much bigger push for the quality of the data. And that's actually something I'm really excited about. I feel like firms in general are starting to feel a little bit more satisfied with what they're receiving from portfolio companies and what they're able to report up to LPs. But I think kind of putting a finer point on the quality of data that we are receiving, kind of looking more at kind of the push to become more standardized and more comparable through different frameworks and different benchmarking exercises, specific calculations you're seeing come from EDCI. I know it's something we've worked with Novata on as well. So I think that should really lead to, again, not only being compliant and providing different stakeholders with fulsome data requests, but also being able to really dig into those metrics more easily and kind of identify areas of real value creation and kind of opportunities for improvement. So not only collecting the data, but like doing something a little bit more useful with it and being very comfortable with those numbers being accurate and comparable.
In terms of the questionnaires that are coming, I think one of the consistent things that we hear is that they keep getting longer and longer. Do you get the sense, though, that the scope of what is being asked is growing? There was a question that just came in over the chat around the nature-related disclosures, and obviously there's been work that has gone beyond just carbon and now is focused on biodiversity. Are you seeing that in the private markets yet, or is that still something that is limited to the public markets?
I would say that we're beginning to hear more and more, especially around biodiversity. I know that PRI has a work stream in process around a biodiversity questionnaire. And yeah, the scope has expanded incredibly. I mean, we looked at another survey. Look, we do a lot of surveys. We did another survey on, how many ESG related questions did we respond to last year, last 12 months. My team was well over 2,000. One of the ESG questionnaires, just a single one, had 200 distinct questions in it. It took a week to kind of fill out all the information in there. And that's difficult. I mean, I worry a little bit about the expansion because it does dilute what we're trying to accomplish today. And so if I look at, like, we recently, about a year ago, signed up to the Data Convergence Initiative, EDCI, in the hopes of helping support the notion around specific and limited KPIs that we can all, as an asset class, agree on. Because I think once we can get there, we can begin to produce that on a consistent basis and have a better story to tell. And when we're answering questionnaires with 200, and we're guilty too. I send out a questionnaire to every manager that we invest capital with. Clearlake knows it well, and it's got a ton of questions. So I'm not sort of suggesting we won't do that, but if we can coalesce as an industry around certain areas of it and focus, that'll be good. And so biodiversity, while it's extremely important, I do worry candidly that it increases the noise and confusion around this topic on the reporting side.
So maybe on building on this topic of expanding questionnaires and the burden that is part of ESG and sustainability, let's talk about regulation and what we see coming down the pike. Is it, and obviously an oversimplification, but on the one hand, you could say, well, if we get some regulation, maybe that'll actually drive some convergence in terms of what companies and investors are ultimately collecting and reporting on. The flip side is, well, it's just adding to the burden and runs the risk of turning sustainability into more of a check the box exercise. So with all that, how do you see regulation playing out in 2024 and beyond? And how, in terms of your firms, are you thinking about staying ahead of it? Anybody want to kick us off, Allie?
I'm happy to talk about this from a US perspective. So I would say, obviously, I'm not a lawyer. I would say in general, we're seeing a ton of different regulation in the US, though. California, I think, is one that everyone has been talking about, kind of the first to be official. And I would expect the SEC language to come hopefully soon. I know they've been working on it. I'm hopeful that this will lead to some more consistency in the data. I think that based on some more compliance-focused webinars I have been a part of, that a lot of these regulations will try to adhere to similar language, so you're not trying to collect slightly different metrics to comply with slightly different laws. So I am hoping that there will be some consistency there. I think that also this is going to be a huge forcing function for ESG teams to really work more cross-functionally. I think that kind of legal has always been a consideration. I think that hopefully your firm already has some relationships within your departments to ensure that ESG is not siloed. But I think for the companies where it is, I think that this is going to be a huge forcing function to just ensure that ESG is not operating by itself. There is more cross-functional collaboration from legal, from finance, from accounting to comply with these broader regulations.
Allie, can I push you on one point there? So, in terms of creating that collaboration across different functions, anything that you've seen that helps in terms of getting folks on board with working across functional areas?
I mean, I think that in general, just knowing what the ESG department is, I think it's a little bit easier in a firm like ours where there aren't that many people. We all sit in one office, so we know each other. I think it becomes a little bit more complicated when you're in a firm of 3,000 people, and you might not necessarily know the different stakeholders in the different departments. But I think that this is a good opportunity to get to know them. And I think starting early is the key here. I think that we all know these regulations are in place. Some of them are coming, and it might be a year or two before you really have to report, but in a year or two, it's going to be too late. So you really have to start building this right now.
Sonia, how are you approaching it?
Not surprisingly, I'm very aligned with Allie's advice. I think, for us, it's a little bit different sitting in Canada. I think generally Canada's fairly progressive when it comes to things like our social policies. And in recent years, we're definitely seeing movement on things like environmental protections and climate-related policies as well. Mixed reviews in terms of how they're being received. But when it comes to like specific legislation or standards for the investment industry, I would say that Canadian regulators are actually lagging both their European and US counterparts. So for example, the Canadian Securities Administrators provided guidance in 2022 on the disclosure practices of investment funds when it comes to things like ESG considerations and ESG strategies. But it's not a mandatory reporting requirement like SFDR is in Europe or like what the SEC is proposing with the climate rule. So it's largely still voluntary. You kind of get to choose your own adventure, which I think you have to stay informed. And to Allie's point, track the timeline. I do wish that in addition to the types of factors that these standards are advising, that they would also synchronize on the timelines a little bit too. Like if we're asking for things, because you're gearing up to prepare for something, and then something else is even further out. And I wish there was alignment on the roadmap as well.
Paul, in 50 countries, how are you keeping tabs on the regulations, and how do you think about it?
Yeah, it's challenging. I mean, if I'll kind of think about Europe and SFDR, which really started in earnest 2 years ago, and even in that time frame, we've gotten legal experts involved. We have a consulting firm that's helping us navigate the water. We have a work stream within our own organization at Hamilton Lane that has cross collaboration between legal, compliance, accounting, And that's just around one area of focus. And in fact, on our Slack channel, we were talking about Slack earlier. On our Slack channel, we have an SFDR working group channel that I think needs to expand its scope to other jurisdictions around the globe. This is coming. The data requests are coming. It's going to be, even as we kind of see what's happening today, it's a little painful because the timelines get moved, the definitions change, the requirements on reporting get fine-tuned. And so it's a little messy, but make no mistake, the reporting requirements are here in some places and around the corner everywhere else. And so I think firms have to be prepared for it, but you have to be smart about it because this can be a big time sink. All those organizations I just mentioned are new expense line items on our books. And so there's a big cost associated with it too, that people need to be mindful of how best to manage that. But starting now is the time if you haven't already. And I do think, if you wait longer and don't pay attention to the reporting, you're going to get caught behind the curtain on it and have to figure out, okay, how do I gather this information? Where do I get it? I've got a deadline now, and I've got regulators kind of looking over my shoulder. So it is a challenge. You have to be smart about it. You have to think about which parts of your organization are impacted by it. And it's interesting. We talked to some like small to mid-market buyout managers who go to their CEOs that are like, I don't even know where to start. Like, I'm just now hearing about ESG. What do you mean gathering all these data points? I'm running a manufacturing business. I don't know, I'm just focused on my business. And those are real concerns. And so there's technology, there's tools, there's ways to kind of help be more efficient. And you have to think about those. Otherwise, you're going to spend a lot of time and a lot of money down a path that may not be the most efficient.
So we're going to turn to technology in a moment, but let's do a quick lightning round. Listening to each of you introduce yourselves, I think it was very clear that you come to sustainability in an authentic way, believing that this work is very important. When you look at regulation, do you view it as helpful in terms of driving forward real change, real progress on these issues, or do you view it as harmful?
Helpful. Rising tide lifts all boats.
Yeah, net helpful, while a little painful in the process.
Yep, I would absolutely agree. Although I will caveat it with just a little bit of some of these are going to be more material for some portfolio companies than others. So I think concentrating on some of the regulations hopefully will not take away from those other material issues.
Okay. All right. Well, thanks for playing the lightning round. Let's turn our attention to technology. Paul, thank you for raising the topic. How do you see, not just you, Paul, everybody, how are you seeing technology evolve, and how do you think it needs to evolve to help private market participants tackle these challenges? Sonia, maybe we start with you.
Oh, thank you for that. So working in tech, I have a list that's about a mile long, but I've managed to kind of coach myself down to the top 3 things. I'll caveat that with saying that these 3 things are in addition to the baseline that it needs to be a good product that works well and is reliable, and it's actually designed for your use case. I know that might seem obvious, but you'd be very surprised at some of the things I've seen in the kind of ESG software category in the past couple of years. So with that said, my top 3 things are, number 1, interoperability. Considering how data heavy and cross-functional a lot of ESG work really is, I think it's super important for platforms to avoid creating data silos and instead offer a solution that fits with investors' broader workflows and can communicate with other platforms where we have relevant information housed. The second thing, and honestly, I can't stress this enough, privacy and cybersecurity. ESG platforms and other tech should really prioritize cybersecurity and data stewardship practices because we are dealing with very sensitive information. There is PII, personal identifying information, there's financial and fund performance data, there's privileged business information, and depending on the asset class, you might even have access to material non-public information. So I think privacy and cybersecurity standards are super, super important. And lastly, improved UX UI. This is a bit of a wish list thing. UX UI is user experience, user interface. But I think it's important from an adherence and usability standpoint. My view is that enterprise and B2B software solutions can borrow from consumer technology design practices and really put the user experience at the forefront a little bit more. Make it more delightful for the users, less clicks, more automation, less manual entry, just a cleaner landing page, things like that, I think would really go a long way to taking some of this, heaviness that we've talked about on all of these topics so far.
Thanks, Sonia. Allie, how about from your perspective?
Yeah, absolutely. I definitely agree with Sonia. I think ease of use, especially for portcos who are new to this space, is so critical from a technology perspective. I also think something that we look very hard at is just thinking about kind of those next steps. I think some of the technology platforms that you're going to see win in the coming years are going to be, well, for lack of a better term, are going to be those who go beyond just simple KPI collection, but really think about the use case. How can people utilize this data going forward? How can we kind of answer that question of how do we use this data to make better decisions? And I think the platforms that really lift that burden to the extent they can are going to be just such an important tool, not only for us as GPs, but for the portcos who use them.
Paul, bring us home, and bonus points if you can throw in a plug for Novata.
I could always throw in a plug for Novata. No problem there. Look, every organization has to invest in their own technology. If you're not doing that today, you will absolutely lose. Like, you have to spend the money, get out there, figure out the best resources. It's going to make you efficient. It's going to make ease of use. That is a lot. That's why Novata exists. We're a happy user of your technology. I think the game for us at the end of the day, and this is the question I get from our investor base, is when can I hit that button and everyone wants a button, hit the button, get the magic ESG report. But there is no magic ESG report. Much like Bloomberg, there's different analytics are important to different people, and that's going to be true forever, right? So there's not one thing that we're all going to say, yes, this is the most important to me and my organization. So you have to figure out what it is, what sort of information you want to extract, how to get it, but have a system like Novata that will house all of it so we can go to one source and just kind of begin to extract that information out. But I can't emphasize enough the importance of investing in technology. And I will tell you that, as we get our questionnaires and different things back, I'm still getting a lot of Excel spreadsheets. It's really amazing, just over the transit here. And maybe that is for security reasons on it. But I don't, I still see a number of organizations that aren't embracing all the technology that's out there today and utilizing that. And that just seems to be time well spent to research it, talk to your peers, talk to other investors. What are you using? How has it helped you do your business? Make it more efficient and release some of the burden on people, because the folks that are kind of filling in cells on Excel spreadsheet one at a time is mind-boggling to me. But I get them.
Yeah, I think we see that from our vantage point at Novata, and I think we see technology as playing two really important roles. One, I think, Paul, to your point, right, taking this work that can be tedious and complex and shrinking it so that you can focus on the things that are more important, either other aspects of your business or making progress on these dimensions that matter. So that's one. But I think the other, Paul, as you were describing your organization and the number of people who are focused on these issues, the truth is, that's that's a luxury that a lot of firms and most companies don't have, right? To have those types of resources. And so our view is technology is really important for making sustainability accessible to a much larger universe of funds and companies, which I think for those of us who think this work is meaningful, it's really important if we're going to see the change. So I'll get off my soapbox now. We only have a few minutes left, and there are a couple of questions that have come in, and would encourage people to throw any additional questions that you have in there. Maybe we do a quick one on E. There's a question about from one of our from somebody in the audience who feels that E is far more urgent, important, and clear than S and G. I hear very different views on this. Some exactly like the person in the audience, and then others who are on the exact opposite side. How do you think about that? Is there one that's more important to your firm? Is it important to think of these things holistically? How do you think about that?
Happy to jump in on that because I have another survey for everyone. So went out and surveyed a bunch of managers on this, or our client base, and asked the question, how would you weight the E, the S, and the G? And the answer came back as follows. The G got 50% of the weighting. Governance is everything in this. And if we think about the private markets, going back 32 years in terms of what we do, how we look at managers, if you don't have a good governance structure, you're not getting our client capital. It's pretty simple. So the G had the heaviest weighting. The E was the next highest, and only slightly. So that was like 27%. And then the balance of that was on the S. But then if you parcel it geographically, you'd see a flip between a little bit between the E and the S, depending on where you were. But the driver's the G. And not to, I think good governance also trickles down to the E and the S, right? It starts with the G. And then you can figure out what your North Star is. What is your motivation? Is it the E? Is it the S? Is it both? All of the above there.
I really agree with that. Did I answer that survey? No, I'm kidding. I think the only other thing I would add to that is I think it's a little bit of a misconception that they are that separate in terms of pillars. There's a lot of intersectionality between the issues, these factors, and then actually the subtopics underneath them. There's going to be a trade-off or an enforcement component at all times. So, you know, you just, I don't think you can isolate them with that level of extremity. Eventually, when you're actually doing the work hands-on, you'll see that they're very interconnected. And either over prioritizing or under prioritizing one will eventually have a trickle down effect on some of the other issues in your mandate.
So we've got just over 2 minutes left, and Ali, I'd like you to start a round robin to bring us home. Any advice that you have for professionals or companies that are just getting started on their sustainability journey from your experience?
Yeah, absolutely. I would say this is a very fast-moving, fast-changing, overwhelming industry, and that's okay. I think what I would give is like an overarching piece of advice is just talk to as many professionals as you can to see what is happening in the space, what their experience has been, what they are doing about it. I think that of all the kind of industries and sub-industries I've worked in, this has by far the most collaborative people, the friendliest. We are all so passionate about the same thing that we are 100% willing to help each other, my panelists included. So I would say this is not a job that can be done in a silo, and like really utilize that network to your fullest extent.
Thank you, Sonia.
Could I build on that? Yeah, that's amazing. It's super good advice. Something that I wish someone had told me when I first started, and kind of pivoting off of what Ali said about an external network, is also to build really strong relationships with the functional leaders in your organization. So much of execution on ESG topics actually lives with the business group level and is only indirectly owned by the sustainability professionals like us. So it's really important to recruit them to your cause. ESG diligence, you need to be on side with your investment team. DEI lives with HR. Carbon accounting, that's finance and operations. LP reporting, that's investor relations. Like when Paul and I first met, that introduction was brokered by our IR team. Regulations and disclosure, your compliance leader is going to be your best friend. So really start cultivating those collaborations in your organization early on. And the last thing, this is a little personal one, I think, don't forget that you're human and give yourself a little bit of grace. This is a very complex role in an increasingly complex environment. And I think a lot of folks that are attracted to this kind of work also really deeply care about impact and want to see progress and outcomes. But a lot of these initiatives really take time. So take the wins as they come, no matter how small they are, and celebrate them.
Thank you, Sonia. That's Paul. That's going to be tough to top.
It is going to be tough to top.
A deep moment. Yeah. But any final thoughts?
Yeah, no, that's fantastic from both of you. I think those are absolutely great lead in how to approach it. And I think for a lot of people, you know, you're not reinventing the wheel. There are a lot of organizations and help out there. There's frameworks. I mentioned EDCI before. There's TCFD. Alphabet soup of all sorts of things, but look around, talk to your peers, see what organizations help you. We're members of ICI, which is another organization, and that's really been helpful to me to understand what people like Hamilton Lane, where we sit in the ecosystem, and how we can navigate our own ESG work and sustainability work. So look for help, and don't start from scratch or feel like you do have to start inventing it yourself.
All right, Paul, Sonia, Ali, thank you so much for an amazing conversation. Private Equity Wire and Novata, thank you for hosting. I have as one final piece of advice, don't let the acronyms scare you. It's going to be okay. We're going to get through this. But I think, Sonia, I think you gave great advice that this is work that takes time. And Ali, to your point, right? Build connections with people who are there to do the work alongside you. Thanks everybody for making the time today. Really appreciate the conversation.